Welcome to the lecture of financial institutions and markets. Now, in this lecture, we'll learn about unit number 3 in these financial institutions and markets, which is all about money market. So, money market is a very important market. This is a market for short-term funds. So, when you talk about financial markets, the financial markets is a market for the financing, that is the capital required for the business. So the total capital required for the business you can put under two heads. One is long-term capital and the other one is short-term capital. Long-term capital is for a long period of time. So the capital which will be for 10 years, 15 years, 20 years, that is called as long-term capital. And the long-term capital that can be contributed through long-term sources of funds, maybe equity shares, debentures, through some other sources, the long-term capital will be contributed, and the investment in the long-term sources of funds is a long-term capital, or getting the capital through long-term sources is long-term capital. So usually the long-term capital where we will get is from the capital market. Now here, this long-term capital will be made investment, will be utilized for investment in fixed assets. So long-term capital will be utilized for making a fixed assets investment. Okay, that assets remain fixed for a quite long period of time. Right. Now, what is short-term capital? Short-term capital is required for temporary adjustment of funds. Or we also call it as short-term capital is it's a type of capital required for various operations of the business, day-to-day operations of the business. So these short-term capital, sometimes temporary, the companies might be or the government might be in need of temporary funds. So these temporary funds, where these particular funds will be, they will get is from the money market. So that's the reason money market is named as a market for short-term funds. So these short-term funds is the duration of the short-term funds will be less than a year time. So whomever borrow the short-term funds, maybe the government or maybe the corporations or maybe any of the financial institutions, whomever borrow these short-term funds, this duration of these short-term funds will be very less, that is less than a year time. So that is all about the money market instruments. In a brief about, I have given you what is money market instrument. So very important market for short-term funds in the Indian market. So these money market are again divided into two types. One is organized and the unorganized sector. So organized money market is a market which has been completely organized, which has been the one which comes under the organized sector comes under the institutions which have been registered with the government. So some registered bodies and its operations are that comes under the particular regulatory body. Then we say it's called as registered. So unregulated or unorganized money market is a market where it's not registered. So no monitoring will be there upon the activities of these particular the players in the unorganized sector. So that is unorganized. Both are there in the outside world, in the finance world. So, and when you talk about who are the dealers in the money market, see, there are various dealers in the money market instruments. So that we will see about the dealers and RBI. What is that RBI role of the RBI in this money market? RBI plays a very crucial role in controlling this money market. So through various tools which it has, it could able to control the flow of money in the country. So RBI has certain tools like bank rate, repo rate, reverse repo rate, and then so RBI through its monetary policy will control the inflation tendency in the country. So this controlling of inflation tendency is the controlling of money supply in the country. So the RBI has certain things in its facilities so that it can control this money market, money flow into the country. So that also we'll see in this particular chapter, unit number 3. We'll also learn about liquidity adjustment facility. Will also learn about marginal standing committee, marginal standing facility, right? So these are the various topics relating to the unit number 3 of financial institutions and market. So basically, the financial institutions and markets talks about the money market and various instruments related to the money market, how this money market is being regulated by the RBI.